Hello, and welcome to another episode of Everybody Counts. It's Malone Bailey's official podcast. Thanks for tuning in. I'm Caroline Rosen, and I'm from the marketing department here at Malone Bailey. Just a quick overview of our podcast before we jump into the topic at hand. This is a podcast that covers really everything and anything in between. So whether we're talking about more technical focused topics such as SEC or FASB updates, to some more soft skill topics, things like firm culture, professional development, some practice management topics. This is a podcast that explores trends and hot topics that affect us and really everybody in our business. So we invite you to always tune in to hear from partners and staff alike. The conversation is versatile and everybody's input counts. I'm delighted to be joined today by Ncho. He's a supervising senior here at Malone Bailey. And Collins is going to be discussing a FASB accounting standard update that improves the accounting for modification of share-based payment awards. And specifically, we're here to talk about the new FASB guidance that clarifies that all changes to share-based payment awards are not necessarily accounted for as a modification. So on that note, welcome, Collins.
Thank you, Caroline. It's a pleasure being here.
We are glad that you're here, and I know that this is a little different from your day-to-day routine. Being on a podcast is probably something a little new and different, and we thank you for carving out some time to do this with us.
My pleasure, and I definitely agree. It's out of the ordinary.
Well, before we dive into the ASU, why don't you tell us a little bit about your background?
I've worked with small reporting companies for several years. I joined Malone Bailey a few years ago from another local SEC audit firm. As a supervising audit senior, I am responsible for planning and supervising audits and reviews of these small and mid-sized public companies across a variety of industries, for example, aquaculture, construction, and advertising, just to name a few.
All right. Well, Colin, since you're a regular on the training circuit at Malone Bailey, you're really the perfect person to have on to talk about the topic today. And before I turn things over to you, I just want to let our listeners know that we're going to be providing a very high-level overview of the ASU, but I invite you to check out our website where you can find a very detailed explanation of this ASU. Our website is www.malonebailey.com. There is a resources section on our website. It houses our SEC and FASB newsletter that goes out, as well as all of the past podcast episodes that we've done. It's an excellent resource. So be sure to check out that section specifically for more information about this ASU. All right, Collins. Well, tell us about this ASU in a nutshell.
Sure. It is common knowledge in the industry that the FASB would routinely amend previously issued guidance. And this is the case here. As recently as last month, the FASB issued a new guidance or amendment to our old guidance, ASU 2017-09, to clarify when to account for a change to the terms or conditions of a share-based payment award as a modification under Topic 718. There is currently the FASB has a definition of the term modification as a change in any of the terms or conditions of a share-based payment award under Topic 718. But that guidance does not contain what changes are substantive or purely administrative. So this amendment includes guidance on determining which of those changes to the terms or conditions of any issued share-based payment award that would require an entity to apply modification accounting under 718. Now, under the new guidance, modification accounting is required only if the fair value, the vesting conditions, or the classification of the award changes as a result of the change in terms or conditions. So what this guidance does is it helps narrow down what changes need to be considered as a modification to the terms.
Okay. Thank you for that overview. And so why has FASB decided to adopt the ASU?
Recently, the FASB has been trying to implement or clarify some of the old guidance, and this amendment is a step towards that goal. The FASB adopted this ASU to provide clarity and reduce diversity in practice, as well as cost and complexity when applying the guidance in Topic 718. And this amendment is specific to the modification of the terms and conditions to any issued share-based payment award. Now, diversity in practice has come about in part because some entities apply modification accounting for modification to terms and conditions that they consider substantive, but do not when they consider these particular modifications as not substantive. That is to say that in practice, the application of modification accounting is purely subjective. Yet others in practice apply modification accounting for any change to an award except for changes that they consider purely administrative in nature. Still others apply modification accounting when a change to an award changes the fair value, the vesting, or the classification of the award. Now, so in practice, you can see that there is already a diversity in how professionals are applying the old guidance.
Yes, and so many of our podcasts have featured discussions on recent FASB updates, and it seems that the underlying reason for these changes have to do with the desire to provide clarity and reduce the diversity in practice.
That's definitely correct.
Okay, Colin, so what are the main provisions of this ASU?
The amendments in the ASU include guidance on determining which changes to the terms and conditions of share-based payment awards require an entity to apply modification accounting under Topic 718. Now, just to highlight the three main provisions of this ASU, the amendments in this ASU require the entity to account for the effects of a modification unless all of the following conditions are met. The first one, the fair value of the modified award is the same as the fair value of the original award immediately before the original award is modified. That means there is no change in the fair value before or after the modification. The second one is the vesting conditions of the modified award are the same as the vesting conditions of the original award immediately before the original award was modified. Same thing as the first one, there is no change in the vesting conditions. And the last one, the classification of the modified award as an equity instrument or a liability instrument is the same as the classification of the original award immediately before the original award is modified. So what this does is saying if there are no changes in these three terms or conditions, therefore modification does not apply.
Okay, thank you for that breakdown of those three conditions. So who is affected by the amendment in this update?
The ASU applies to entities that change the terms or conditions of a share-based payment award within the scope as discussed in Topic 718. And most of our clients and most of the industries in this space do issue equity-based or share-based payment awards. So I would say a vast majority of clients are affected.
Okay, great. And when will it go into effect?
The amendments are effective for all entities for annual periods and interim periods within those annual periods beginning after December 15, 2017.
Okay, got it. And early adoption is
It's definitely permitted. Early adoption.
Okay. So as companies begin to think about this ASU, what kind of questions should they ask their accountant?
It's important before making changes, the companies should inquire with their accountant if the changes are substantive or administrative. That will determine if modification accounting is required or not.
All right. Where do you recommend that companies go to find more information about this update?
Companies can visit the resources section of the Malone & Bailey website. This section houses our SEC and FASB update newsletter. I would also invite anyone to reach out to me or any other professional here at Malone Bailey if they have any questions. You can always look up more information on the FASB website at www.fasb.org.
Right, and there is an entire document dedicated to this particular update. And also, I'd like to point out that contact information is on the Malone Bailey website.
That's true, and that the actual guidance is quite lengthy, so hey, pack your patience when you read it.
Well, and that is why you're here today, to kind of boil it down for everybody and highlight some of the main points.
And I'm glad to have had the opportunity to do that. Hopefully it was as succinct as possible.
Yes. Well, Collins, last question before we wrap up. This is definitely a fun part of the conversation, and it's completely unrelated to the topic that we've been discussing. It's called our This or That section. I'm going to throw a couple of thoughts your way, and you tell me which one you prefer. All right? Okay. Coke or Pepsi?
Coke. I haven't seen Pepsi in the office yet, so I'll stick with Coke.
Stick with Coke. All right. We know you have a baby at home, so do you prefer diaper duty or bath duty? Diaper
duty is a lot easier.
You know, it's not every day you find a guy that likes diaper duty.
I'll take that over bath duty. I don't like getting wet.
All right. And last but not least, Tom Brady or Aaron Rodgers?
Aaron Rodgers. Let me see. No, Tom Brady.
Tom Brady, of course, right? Well, Collins, thanks so much for joining us today.
It's a pleasure.
And we will most certainly have you back on the show at a later point in time. Thanks to all of our listeners for tuning in, and hopefully you all have a much better understanding about how this ASU will affect you. We invite you to always check out our website. Lots of great information there, www.malonebailey.com. And we will definitely see you again next time. Thanks so much.